All right, some really nice trades in adaptive moving average. Let's take a look at the performance summary. Here is the most recent. It's at equity peaks. You see this long series of nice trades. It went through a drawdown, and now it's making equity peaks. And so that's typical of trading systems. They go through their cycles, and that's why we have portfolios. So you see adaptive moving average. You take these series of long trades, and then a really nice series of short trades as the market's down, then a nice series of long trades as the market is up. And so yesterday and today, yesterday just not much, narrow range. Today gap down, it's short, and we'll see. There's a bullish desire to continue to just drive this market up endlessly, but we'll see what happens. We get the ebbs and the flows of the markets, and so it's short today, and quite honestly, it's probably due for a loser today, but if you're already in it, I wouldn't stop trading it, and you can always start after a loser or increase contracts after a loser. Adaptive moving average comes with the open code, and so if you get the portfolio, that is. So one of the benefits of getting an annual subscription to the portfolio is adaptive moving average open code. I've never put a lot of faith in moving averages, but when you adapt the L1 and the L2 based on the ranges, you can get this nice setup, and it's not all on the long side either. I would have thought, wow, for the last 7 years, this is showing that most of the profits would be on the long side, and you do have most of the profits, but you still have a decent amount of profits on the short side. Now, this is a raw strategy. Uses a 40-point stop loss, but not all trades lose by 40 points since we exit at the end of the day, and we also have reversals. For example, here's a long trade that was a losing trade, and it was a smaller loss because it reversed to the short side. So we're giving it room. We're not getting chopped up with a 40-point stop loss, but it can have a 40-point stop loss. And so once again, here's the equity curve. Here is the maximum adverse excursion. You could possibly trade with a much smaller stop loss than 2,000, but that's where we are right now to allow for future volatility and to give this strategy a lot of room to run. Average trade profit is 106. 93 on the long side, and 126 average trade profit on the short side. There's about 160 more trades on the long side than the short side in this setup. So that's adaptive moving average. Again, one of the benefits of the portfolios is you get the open code for this strategy.